Right, let's take a look at this. It's time for your Friday market update. Global markets have been jittery this week as geopolitical tensions in the Middle East have driven oil prices above $70 a barrel, prompting investors to seek safety in things like gold and reshuffle risk positions. Meanwhile, the world's largest sovereign wealth fund posted a record annual return, led by strong performances in technology and banking sectors. With us to unpack what all of this means for markets, economies, and investors here in Africa and globally is Chantal Marx, the head of investment research and content at FNB's Wealth and Investments. Chantal, always good to talk to you. Happy New Year, by the way.
Happy New Year to you as well. It feels late to still say that, but here we are.
Okay, so global markets have been rattled a little bit by tensions in the Middle East. I guess for our listeners, some might be wondering, why does a conflict thousands of kilometers away move prices at the fuel pumps and food markets across Africa?
Well, it's a demand and supply story. So specifically when it comes to tensions in the Middle East, there tends to come supply concerns along with that because the Middle East is kind of the biggest region in terms of oil production globally. Tensions there can result in an issue when it comes to oil production, or in this case, a movement in oil. And because demand is consistent and potentially even growing, supply issues can result in the price of oil and fuel as a consequence increasing. Now, when we look at the situation, specifically as it relates to Iran, it's about the movement of oil. The Strait of Hormuz is around Iran, and it's the only way for oil from the Persian Gulf to get to open waters. And if there are any blockades or military activity there, it becomes very complicated.
Um, Gold is very much in favor at the moment. Investors rushing into gold. What does it tell us about risks out there that they're jumping into gold?
So I think that there are three reasons why investors are moving into gold at the moment and still moving into gold at these very high levels. The first is that safe haven appeal because there's chaos globally, because there's a lot of uncertainty in financial markets. Investors are moving into gold. The second reason is strategic. Momentum is very strong towards the upside, and traders are taking bets that that momentum will persist. And then the third reason is FOMO, fear of missing out. A lot of retail investors will be saying, well, gold is up so much, it's probably going to continue increasing. I don't want to miss out. And they are still pushing their money into the commodity.
So it's interesting what's been happening on the continent. We've seen South Africa's rand strengthen. We've seen inflation slowing. But other parts of the continent are going in a different direction. How do you make sense of this?
Yeah, I mean, when we're looking at the South African rand specifically, the rand has not strengthened that much against currencies other than the US dollar. So there's a measure of US dollar weakness. And then I think the rand stability relative to other currencies really is a function of improving the fundamentals in the South African economy. So there's a real reform agenda that is taking place at the moment. There's quite a measure of political stability that we actually haven't been used to in a while, that is also supporting the currency. And things like gold and PGMs, or commodities like gold and PGMs that are rallying, are really good for South Africa's terms of trade. Now, that's not necessarily the case for every single country on the continent, and that's why you could be seeing that divergence. So if we look, for example, at an oil producer, oil prices have spiked over the last couple of weeks, but they're actually quite low, and they have been low for quite some time. So in that case, if you're an oil exporter, your terms of trade won't look that great. But for South Africa, as an oil importer and an exporter of commodities, our terms of trade look fantastic, and that supports our currency.
So we've seen strong gains in global tech and banking stocks led by major sovereign wealth funds. What does this signal about where big money is placing its confidence right now?
Yes, it does seem as if sovereign wealth funds generally have performed very well, but I mean, markets generally have performed very well also. And I mean, as you mentioned in your introduction as well, really bolstered by technology investments and a strong performance from banks globally. I think what it tells us about those two sectors are quite limited. Aside from that, there is still loads of investor support out there and big investor support for the technology trade, specifically as it relates to AI and for the relative stability that banks offer globally. I think there's been a lot of changes in the banking industry over the last 2 decades, and really it does seem to be reflected in those companies' profitability and the returns that they're able to offer shareholders. So I would think that that support from big investors could potentially continue to drive share prices in that space higher.
Chantal, so much to talk about, but so little time to unpack it all. So we're going to have to leave it there for today. But thanks so much. Your insights always greatly appreciated. And we'll chat again next week.
Thank you. Bye.
It's Chantal Marx, who's the head of investment research and content at FNB Wealth and Investments with our Friday Markets Update.